Welcome, everybody. It is early in the morning, so please stand up. We're going to get stretched. We're going to get engaged. We're going to have good energy, and I'm going to give you a quiz. So question number 1, raise your left hand if you want to do good, and raise your right hand if you want to make money, and raise both your hands if you want to do good and make money at the same time. Fantastic. All right, I'm glad to see everybody has their hands open. That is one of the themes of sustainable brands. And so I've been honored and privileged to be part of the Sustainable Brands community for almost 10 years now, since the beginning. HIP Investor, my company, will be 10 years old in December, so we'll get it a lunchbox. And really grateful to Dr. Siracool for bringing us all together and to share more about how to be sustainable and to build a better world together. So this morning, we're going to talk about actively measuring purpose and the path to profits. This is something that I have taught at Thammasat University as well in capital markets and innovation, as well as social entrepreneurship. And then with some of you in the audience, I've also been a judge for the Global Social Venture Competition, which is helping to spur more innovation. So, and I'm also the author of the HIP Investor book, and so this is your how-to guide of how to do good and make money at the same time. So feel free to check it out. And just because I am an investment advisor and an investment manager, please read this. And specifically, one of the things we're going to hit is past results are not indicative of future performance. And so one of the interesting things to know is when you're evaluating how to invest, you should be looking forward, not only backward. So purpose to me and to how we look at things at HIP is this intersection of solving human needs, doing good, the left hand, with seeking higher profits, making money, the right hand. And when we do this right together, we can bring those together. So what we saw yesterday in several of the presentations were the Sustainable Development Goals, and there's 17 of these, including no poverty, putting poverty in the museum, like Muhammad Yunus will say, zero hunger, quality education, gender equality. And these are all purposes that can be measured and managed in a business model. And so our version of that is something that we call health, wealth, earth, equality, and trust. And these 5 themes actually can be a management system for a business. And they can also be themes for an investment portfolio. And therefore, as an entrepreneur or a corporation and an investor coming together, they can have a shared view of, are we pursuing health, wealth, earth, equality, and trust together? And these map into business in these 4 Ps: products, people, profits, and planet. And so in our short time together, we'll cover each of those. So the HIP Investor Rating is one form of rating the sustainability or the impact or the purpose that a company produces and that any investment produces, that a government or a nonprofit produces. And it's a 0 to 100 scale. And closer to 100 is net positive purpose or impact. And closer to 0 is net negative impact. So of course, to build a better world, we want more hundreds and fewer zeros. Now, when you actually apply this, like we've done, research over the past 10 years, investing over the past 7 years, we've rated more than 4,000 companies globally, including 29 here in Thailand. Checked it this morning. And so these 29 companies have enough information for you to evaluate them from the outside and include companies like PTT and Premier Group of Companies and the like. And what we found is, around the world, that companies who rate higher on their purpose, rate higher on their sustainability, end up making more money. This is a 10-year return on equity. There's a similar chart for a 5-year return on equity. And companies who have a negative purpose or negative sustainability might even lose money, even over 5 or 10 years. So this is very compelling on how you can connect doing good and making money. And the Harvard Business School, as well as other academic institutions, have written papers. And if you go to the HIP Investor website, you can see more than 100 academic papers that show that these relationships hold. So it really breaks this belief system, which actually isn't supported by the evidence, that to do good, you make less money. In actuality, when you do good, you have the possibility of making more money with less risk. So purpose can be profitable. Measuring your purpose can lead to these benefits. Customers buy more, as expressed in the products. Employees work more, they're more motivated, and they're driven to work for a purposeful company. Nature saves more. When we use less water, when we use less oil, then we don't use that natural resource, but we also don't have to spend money on it. And investors value these companies more. And so the key contrast here between purposeful or not is, are you being innovative or are you being extractive? And in these factors of people and planet, are we being extractive of people by not paying them enough? Are we being extractive of the planet by taking and not replenishing? So whether it's your company or your portfolio, think about this contrast, extractive versus innovative. So in products, companies are innovating by people with nature. So in products, General Electric is a company, General Electric is a company that for the past 10 years has had a theme of eco-imagination. So imagination plus ecology, eco-imagination. And there's hundreds of products that GE creates, from LED light bulbs to energy efficient locomotives to jet engines, that fit these better and better profiles. And today, it's more than 30% of GE's revenues fit this environmental profile. So they have found revenue growth and profit growth from markets that fit an environmental purpose that you can tie back to the SDG, Sustainable Development Goals. And BASF, who's a partner of sustainable brands at some of their conferences, also is evaluating their chemicals and other industrial products. So at BASF, they've classified 1/4, slightly more than 1/4 of their global revenue is producing this positive benefit. And they're evaluating not only the products, but the supply chains to show what needs improvement. And what we do at HIP for the Newsweek Green Rankings, Newsweek magazine, we evaluate 1,000 companies globally with corporate nights, and we look at the products that those companies are producing. And so if you take a company like Toyota, who's here as a sponsor, they sell cars that consume gasoline, that are hybrid electric and electric. And what we do is we look at the revenue associated with each of those products. And when you do, you get a better sense of, are the companies selling products that are sustainable, or are they still selling some products that lead to more of an extractive world? And when you compare those two, when you compare the high sustainability companies versus the low sustainability companies, you can get a positive excess return. So the second group is people. Now, on the financial statements, are any of you accountants? Anybody like accounting? So in accounting, where do you think people are in the financial statements? Are they an asset on the balance sheet? The answer is no. They're actually an expense on the income statement. And so what that trains us to do when we're accounting focused is to pay people less rather than invest in our talent as assets. So that's what's in the majority of stock market value. The majority of stock market value is in this category. And when you actually calculate human capital value, and we've had sustainable brands companies join to measure their human capital value, like Interface, the company that makes carpets, and the human capital value is a better fit for your stock market value than your accounting balance sheet. And the companies who are the best companies to work for, and you can get certified as a best company to work for from the Great Place to Work Institute, those companies also financially outperform. So when you invest in people, you invest in their training, you help them be innovative, and you're not extractive of the talent. Financially, that can be a very good decision. Another good decision is to make sure you have enough women on your board. So Credit Suisse did an analysis of more than 2,000 companies globally, and they found this, that actually more than 800 of those companies had no women on the board, despite having customers and employees and, of course, society that is half women. The companies with one or more women on the board financially excessively outperformed the ones with none. And so these companies are, again, looking forward across multiple decades. They're building 100-year brands. They're assessing the risks and financially outperforming. So on the planet side, Coca-Cola, and so there's Coca-Cola that you can get out in the fridge out there. Now, when you grab that bottle of Coke, remember that when you drink that Coca-Cola, you're not just drinking one bottle of water, sugar, and secret formula. You're actually drinking 2 units of water. The one that you're putting in your body and another one. And if you have a beer, it's actually 4. You're drinking 4 units of water for every 1 unit of beer. So eliminating water waste in your company, if that's your environmental purpose. And so Coca-Cola's business is based on enhancing water and liquids to refresh and hydrate us, but they need to do it in a sustainable way. And today, around the world, water is usually free or cheap. In the future, water will not be free or cheap. And from your supply chain, what you can do is evaluate your suppliers, your tier 1, tier 2, tier 3 suppliers. And this is a scorecard by the company Kering, K-E-R-I-N-G, which sounds like caring, C-A-R-I-N-G. And they first did this for the Puma shoe to evaluate what goes in the shoe, what rubber and leather and materials go in. And what they found was they had to go deep into their supply chain to make it more sustainable, to actually produce a more profitable product and a more sustainable product. And you can really tighten your purpose to the goals, to the overall goals. This is a view of environmental goals related to the board and chief executives and team across Nestle and Unilever and Statoil and BASF. But there's a new wave of companies, you'll hear discussion around it at this Sustainable Brands and then the Global Sustainable Brands, of integrating the Sustainable Development Goals, some number of the 17 SDGs, into the strategy and ultimately into the performance system. So the last category is profits. How does this all come together? If you measure your people and you measure the planet and you line that up with the purpose of your products, is that good for your portfolio? And it's a large part of the stock market value today are these intangible assets that are people, that are profit, that are the benefit or costs of your product. And these are some ways that you can measure them: customer satisfaction and employee retention. And you can build an integrated scorecard around these. And we have analyzed more than 30 of these metrics across 4,000 companies, going on 10 years now. And that's what we're seeing is when you're more purposeful and more sustainable, you can make more money, like we both raised both our hands, or you can avoid the potential of losing money. These are all knowable yet ignored factors that are not on the financial statements. So when the SEC or the stock exchange like the SET mandates this disclosure, it's actually helping us evaluate who can be more purposeful around ESG criteria. So all of this relates to future risk and upside. Remember, past performance is not indicative of future return, so we have to look to the future. And everything that I've described to you are future-looking factors. That's how you should be investing. And you can do this across your whole portfolio in private companies and public companies and hedge funds. We also rate 20,000 muni bonds. We rate governments and schools and hospitals on their actual benefit to people and benefit to the planet. And it can even roll up into a mutual fund that you can invest in. And while this is a BlackRock healthcare fund, and you can embed this in your retirement choices for employees, and that helps young people invest more money, because younger people today want a purposeful investment and they want to invest in the future that they're going to live in. So what I'm showing you here, is, if it doesn't stick, this is the Be Kind mutual fund that's available here in Thailand. It invests in about 30 companies, some of which you see here, Siam Cement Company, Thai Union Group. And what we've done is overlaid these purpose and sustainability ratings related to health, wealth, earth equality trust, as well as the products and services and their relative industry performance to say, are these, how purposeful are they? How sustainable are they? Could these be better in some way? And the blanks that you see are companies where we don't yet have the information. They're not yet reporting. So if you're not transparent in bringing your, in showing what you're doing inside your company, it's difficult to attract investment. So if you want investors, you will need to be more transparent. And then one last slide here is these are the HIP ratings of countries around the world. And so you can see Thailand has is in the green for having a positive development, sufficiency focused economy. And then there's a mix of yellow and red in different countries. And this can help, you can help boost sustainable development goals not only by evaluating how you can improve the human, social, and environmental condition, but you might even be able to issue green bonds that investors want to invest in to fund those things. So in summary, things you can do to be more purposeful and be more sustainable is describe the financial value of purpose, like we showed you, to capture and track the green revenue or purpose-driven products, to calculate your human capital value, people as an asset, and put it on the balance sheet like Interface has done, and they have operations here in Thailand, to issue green bonds, and maybe even not just to do a financial quarterly earnings call, but to do a sustainability quarterly call, and to describe how you're improving the world through your products, people, and planet. So that's what we've covered for today. I'll be here the rest of the day. Feel free to ask questions. The HIP book is a resource as well. So thanks for your dedication to building a better world and that at the same time can help make it financially stronger. Kap kum kap.